Great. Okay. So I'm just going to kick off. So for anyone that hasn't met Phil before, this is Phil Pomford, General Manager, APAC WorldPay Merchant Solutions at FIS. Phil will be taking you through the 6th annual Global Payments Report. We'll have an hour in total for this session. The first half an hour will be sort of talking about more global context of the report findings. We'll then delve in a little bit deeper into Australia and New Zealand specific findings. We'll then have around 15 to 20 minutes towards the end of the session just to talk to any questions that you have on any of the key report findings. We ask you to please stay on mute throughout the session and please save any questions till the end. If you do have any burning questions, please feel free to send them through on email to the FIS alias, which is fisau@zenogroup.com. Great, so I'll hand over to you, Phil.
Excellent, thank you. And good morning, good afternoon, everybody. Apologies if my voice is slightly hoarse. It is earlier here. My first coffee has only just gone down, so I will try and keep it at the right tone that you can all understand. And Robin, I appreciate you're going to be driving the slides, so if you wouldn't mind just sort of skipping on to the next one, that would be great.
Great, over to you, Phil.
Cool, thank you. So as Robin kindly said, my name is Phil Pomford. I'm the General Manager for WorldPay from FIS's e-commerce business. I'm based in Singapore with the nice background there. I absolutely wish I was with you all. Appreciate some of you are also going through a lockdown that's happened obviously in New Zealand, so tough times all round. And this is the first of the 6 years that I haven't been able to sort of be in country and sort of present this. And I really miss it. And for all of us who are sort of going through it, I really do feel for everybody and just hope that we're through this pretty soon. But just a quick introduction to the business. Some of you may know the name WorldPay, where we became part of FIS just over a year and a half ago now. And the business itself, FIS business, if you're not aware of it, aside from the merchant business, which is WorldPay, where we provide merchant solutions to merchants all around the world, and in particularly e-commerce in this region here that we are in. We also have a banking division which provides software for all of the leading banks around the world. And then finally, we have a capital markets business as well, which provides technology solutions, again, to the likes of insurance companies, private equity, all those sort of businesses in that space. So it's an extremely large technology business. We can move on, please. The Global Payments Report, as Robin mentioned at the start, it really is the most comprehensive piece of white paper that we do every single year. I always sort of talk about the fact that our competition references this product very well. Our customers really rely on it, and actually the industry looks at it as well, because really it's looking at trends, and it's looking back first of all at what happened in the previous year. And obviously we've just been through a unique year, let's call it, in terms of change, but also it's looking forward, because the industry itself and the payments landscape and where our merchants play today is changing dramatically, and we try and make some predictions around what that looks like in the future. We obviously look across over 40 markets now around the world. We speak to almost 50,000 people as part of this, so it's a really extensive piece of research. And ultimately, it's there to help our customers, but it's also there to help the industry as well, just to try and sort of see how we're going over the next couple of years. So if we can move on to the next slide. Now, there's little doubt, and apologies, some of these slides are extremely heavy, and if you've got any sort of questions at the end of this, please do reach out and we can provide that data for you. But there's little doubt that COVID really has accelerated a trend that's already been going around e-commerce, but it's also accelerated at the fastest rate in the last 5 years. Obviously with shops being closed in different places and at different times, e-commerce really become a place for consumers to go to get some of their basic, let's just say, but also just their broader range of consumer demands. Because of the 19% growth last year, we actually expect 2020 to finish slightly higher than what we'd already predicted in our previous report last year. And that report we thought was bullish. Obviously, we didn't predict what was coming down the pipe in terms of a global pandemic, but it certainly just shows how that trend and what COVID has done to really push things along. We're also projecting this is not going to go away. So we've talked about this trend for a number of years, but we are projecting an annual growth of 12% from here on into 2024. And e-commerce has grown significantly now to about 10%. And it's even sort of 20% in some countries. What's really driving that, and again, this has been a key theme for us the last couple of years, is around mobile commerce. We expect, again, that to be well over 50% of all e-com in the future, which has repercussions for merchants that we can talk about in a moment. Next slide, please. In Asia, we actually expect that growth to be slightly higher. We're expecting the total value of spend in this region to grow from 2.4 to 3.9 trillion. That does include China, which obviously is a significant share of that. Again, it's largely driven by mobile. We're expecting mobile to grow from around about sort of 59% now to just over 64% in the future. China is continuing to grow. I mean, the sheer size of the market when you go there is just phenomenal, but we're expecting that to continue to grow at a rate of over 14%. And actually by 2024, the total spend within China will exceed the US and all of Asia combined, which is quite mind-boggling. But anyone who spent any time in China will probably appreciate how people spend, and the digital payment network that exists in China today really is probably laying down how other markets around the world are looking at this. Also, as well, it's very clear here, maturity of the market, developed versus developing, really does dictate the growth over the coming years. I think if you just look at Indonesia, for example, here with a growth of 19% we're expecting, versus somewhere like Japan, which obviously is a lot lower. But that, again, probably nothing unusual there, but these markets are off a small base, but they're growing as people become more into digital payments, the unbanked becoming more and more active in the market as well. We can move on, thank you. We've also talked about alternative payments, and we'll come to that in a moment, being obviously a growth engine across the world, and particularly in this region. But cards still do dominate. Again, if you just look at sort of the green colours here more than anything else, especially into places like Australia, New Zealand, where we have a number of people on the call today, cards are still heavily driving the spend in e-commerce. However, if you also look at buy now, pay later, highlighted in red, there's been a significant growth, and I think anyone on the call here will obviously be very aware of, in their home countries, of the growth of some of the huge names, local names like Afterpay, for example, like Zip, who are really growing, and there's more and more names coming down the pipe. And I think it's an exciting space, and I know it's a space that's also heavily talked about in the press and obviously through regulations at the moment, which again we can talk about in a moment as well. If you also then compare, though, the differing trends in some of these markets, the developing versus the developed, look at somewhere like Malaysia, where bank transfers are still, one of the highest payment methods. The Philippines, cash on demand is still high. Indonesia, e-wallets, and we'll talk about wallets a lot in a moment as well. But it just shows the fragmentation and how different the market is. And whenever we talk to a customer and they ask us about coming into Asia or where they expand into Asia, it's always a challenge to talk to them about how diverse the region is. And to be successful, you can't just rely on credit cards. If we move on, thank you. So alternative payment methods, APM, apologies for the acronym, but alternative payment methods to us at WorldPay is anything that's not a credit card. So a wallet or a post payment or buy now, pay later, etc. They've obviously grown significantly. We're forecasting them to be over 50% of all spend by 2024. If you look at, sorry, just move on to the next one as well, sorry. Just noted the slides changed. But we talked about the growth in the different types and the wallets. And wallets for us are one of the fastest growing. There's no doubt about it. And why are they growing so much? I mean, it's for us, last year, we talk about 2020 being such a unique year, but wallets actually grew by 5% last year, which is equivalent to 3 years worth of growth in 1 year, which is quite phenomenal. And what's driving that? First of all, it's convenience, ease of use, security. I think any of us who have used the product, whether it's an Apple Pay or a local product, and just how easy that product is to use and how secure it feels, because obviously it's based off biometric facial recognition or thumbprints, whichever you use, it feels more secure, it's quick, people like that. And whilst we always, and this is an interesting slide for me, was understanding the actual funding of the wallets, because I think there's always been a theory that credit cards or a card of some variety funds the wallet. In Australia and New Zealand, that's quite true. 73% in Australia, 76% fund their wallets with a card in New Zealand, which are actually higher than the global average. We are seeing a shift in different countries towards, and especially developing countries, where open, and also places where open banking is popular, that people are starting to use bank accounts as a funding source towards their wallet. Also, as well, I think the reason why wallets are growing, aside from the big brands like Apple Pay and Google that we all aware of, There's lots of local flavors. So Paytm in India, for example, accounts for about 8% of all transactions. Mobile Pay in Denmark, 14%. Momo in Vietnam, 11%. So there's lots of local wallets that are also driving this trend. And again, back to my point about advising sort of merchants about how they grow, they need to be aware that each market is very different in terms of the demand. But the overall theme around wallets is extremely strong. And the final piece, if you look at the growth in marketplaces in the last 12 months, there is no doubt the likes of Amazon, Rakuten, Alibaba have had phenomenal years off COVID, but they also all provide their own wallets as well. So again, just driving that trend. Robin, can we move on to the next one? So buy now, pay later. Again, it's something we talked about in last year's report, I think even the year before, but last year was sort of the seminal moment for us in terms of how buy now, pay later was starting to take hold. But I think what we've seen now is outside of the core markets, and Australia and New Zealand is a core market for buy now, pay later, given the growth of the homegrown players there. But also now we've seen the US grow, which is now almost doubled in 2020. So we're seeing a huge growth outside of those markets. The customer adoption as an alternative to credit is driving this growth. Merchants also see growth off the back, so it's kind of a win-win on both sides. And again, regulators are now starting to take more of a look. Obviously, there's regulations very lively in Australia at this moment in time. The UK is now looking at probably Australia as to how to potentially manage these going forwards. And I think, as payment landscape changes and moves forward, it's important that frameworks are created that govern and protect both the consumers and the merchants. And also, people need to adapt to that. The one good thing, obviously, around regulation is that it does ensure trust and reliability in the payment technology. It creates that level playing field. And I think that's only a good thing for all of the players that are in the business today. If we look at the next slide, please. Point of sale payments. I mean, I think this is, obviously a bit of a no-brainer really that things here slowed down with COVID. We with shops being shut and our business, WorldPay has a huge business in point of sale payments in both Europe and in the US. And obviously we saw a great slowdown ourselves with people being unable to go. And therefore, that's why we've seen this huge growth on the e-commerce side. We are expecting there to be a rebound, but we don't expect it to be anywhere near as fast as we've seen on the e-com side. And we certainly expect it to be bumpy, just given the challenging circumstances that exist in each individual country at the moment. Next slide, please. Cashless is a term that's been thrown around for a number of years, but I think one thing our report this year really is starting to show is that it's becoming a reality. Just to orientate you, if you look at Australia here today, what we're saying at the moment is in Australia, in 2019, 15% of point of sale transactions were by cash. We expect that to go down into 8.3 last year, and an estimate looking forward as a forecast, for 2024 would be down to 2%. So really cashless is becoming a reality in many, many places. And that's obviously, again, really linked to a mega trend that existed with digital payments, but also just accelerated through COVID as well. Cash has dropped globally by 10% in 1 year, which is quite significant. Obviously, there's a number of reasons around that. Cash is seen as a little bit sort of unhygienic. There was reports very early on in the pandemic, if I remember back almost 12 months ago, around sort of cash being a transmitter. I don't know if that was ever necessarily proved, but that was a theme that was out in the globe. And so I think people also sort of took that on board, but also as well contactless payments, changing of contactless limits by a number of the schemes and governments around the world has helped to really grow contactless. And last time I was in Australia, for example, it was the same as it now is in Singapore. It almost, you just see people constantly tapping with their cards as opposed to pulling out cash. And again, that's a trend that we see globally is really starting to push towards this cashless society. And, governments in many places around the world are championing digital payments. Here in Singapore, for example, QR code is being pushed significantly. If you go to any of the hawker centres, the small sort of food marketplaces, now almost 50% of them are accepting digital payments, which historically didn't exist. So again, we're expecting a big shift here towards cashless over the next sort of 4 years. Okay, coming down towards the summary. So to summarize really sort of the changing sort of consumer habits in Australia, for example, as we say, sun is officially setting on cash. That move is really sort of starting to accelerate in our view. The consumers are really cementing their preference for more convenient, contactless, safer methods at point of sale when I talk about digital wallets and contactless payments. There's no doubt that in-store has felt the brunt of COVID, with cash now only 8% at point of sale versus global of 20. So I think Australia really has seen that shift, and I think contactless payments has had a huge impact there as well. But one of the key things, obviously, is, and this is for the industry as a whole, obviously, is to think about and really focus on financial inclusion, because parts of the economy rely on cash significantly, whether it's donations, tips, for example. So we need options to suit all. And we're not saying cash is going away completely. We're just saying that it's going to significantly be reduced. And then over in New Zealand, the data suggests obviously buy now, pay later has got a stranglehold, but is also going to continue to grow. We expect it to grow even more and potentially overtake cards by 2024. That is a trend that we're just seeing. And again, Australia and New Zealand are much further ahead than other places in the world, but we are starting to see a very similar trend in other places. The move towards cashless is slower in New Zealand. I think New Zealand has certainly booked the trend around cashless. And we expect actual levels of cash in New Zealand to probably remain relatively similar between now and 24 based on our predictions. Many reasons for that, but I think, New Zealand's very early and rapid response to COVID, targeted lockdowns like we're unfortunately seeing at the moment, has meant that shops have been closed probably less than other places. So I think that's the reason why cash has continued to sort of remains higher than the average. And then finally, what does it mean for retailers? I think, from an Australian perspective, despite the headwinds around sort of COVID, there's certainly been an acceleration of e-com. We expect this to continue over the next 4 years. We expect the market to grow 46% in Australia, which is huge. Retailers, and we actually talk to obviously a lot of retailers, and we do a lot of calls with partners in the ecosystem. And really, it's about that shift from physical to digital and how they ensure that they connect with their consumers the entire journey. They also help them understand, the payment methods across the different types of channels and ensuring that they offer those right payment methods. They need to ensure that buy now, pay later obviously is out there as well, and that's key for their consumers as well. And for New Zealand, again, we're expecting a growth of 40%, which is significant to 2024. One of the big trends obviously there is around mobile as well, growing mobile spend. We expect mobile to be almost 50% of spend on mobile. So again, for retailers, it's ensuring that it's a seamless transition onto a mobile device. Very simple things like having mobile optimized pages ensures that it's a seamless checkout for someone. Consumers today are looking for frictionless. They're looking for speed. They're looking for a very simple way of using biometrics to check out. And I think merchants in New Zealand who can help consumers very simply transition across will do extremely well. And that really does link to the whole idea of omni-channel commerce, ensuring that if I see something in shop, I can buy it online, I can return it in store, things like that. I think merchants in New Zealand really do need to think about that as they look forward. And with that, I think that is my last slide. And I'm just going to pause there and grab some water and ask if there's any questions, please.
Yes, thank you so much, Phil, for such a comprehensive overview of not only the global but the in-market stats as well. So I'm just going to lead with a couple of questions that we've got that's come in from you guys on our email alias. And I want to try and keep an equal Australia and New Zealand split as well. And so please do just shout out your questions following those that we've received on email. I'll start with Phil. What is the driving shift towards cashless in Australia?
So, yeah, to me, I actually think for Australia, it's probably led by contactless card payments. Australia actually leads the way globally on many stats. If you look at Visa and MasterCard in terms of contactless usage. And I think, and again, these are trends that existed beforehand, but human behavior is around sort of speed nowadays and checking out shops and not spending too much time at the checkout and being able to tap and go has been something absolutely huge in Australia. I think contactless is one thing. I think the other, which links to that sort of behavioral piece, is just digital wallets and the explosion, the likes of Apple Pay, Google, Samsung, PayPal, all of these wallets available at point of sale for people. And the fact that we all literally live with, I've got two unfortunately, but two mobile phones attached to our hands a lot of the time, it just makes life easy. And I think that is another reason why we're just seeing this shift towards cashless.
Fantastic. And just another question that we've had is, what's behind the rise of buy now, pay later in New Zealand specifically?
I'm not sure if it's specific to New Zealand, but I think certainly, what we have seen generically is, and I know this is a challenging point, and it's obviously debated a lot, but for us around the research that we have done, the concept of using it as a budgeting tool is something that comes extremely strong in our research and our discussions, in that a younger generation of people, and we have another report called the GenPay report, which I think we should share with you also as well, because the GenPay report talks about different age groups using different products. And it was very clear that it's a strong product in the younger Gen Z age groups. And I think the convenience and the ability to be able to spread the payments, to be able to make budgets, the avoidance of using a credit card. And again, if we go back a number of years ago, we used to talk about the fact that that generation was impacted by the global financial crisis. They didn't want to get themselves into huge amounts of debt on a credit card. And so I think the product has sort of fitted into a sweet spot that has seen that growth. And I've not seen a differential between each market, to be honest with you. I think that's a generic value prop as part of that product that we've seen grow. And even in Singapore, where credit cards are still huge here in Singapore, we've still seen the younger generation now starting to use buy now, pay later here and walk away from credit cards. And I think it's that just seems to have been a trend that we've seen across all different markets. And the other thing around the product itself is, and again, it targets that age group of the millennials or the Gen Z who are mobile. They've grown up with mobile devices as their number one sort of access to all sorts of media and payment methods now. And the fact that it's delivered seamlessly through a single app on their mobile device makes life very easy for them, and therefore people are choosing convenience.
Brilliant. Okay, well, that's all the questions that we've received on email. So I'm happy to open the floor to media for any further questions.
I'd love to ask a question if possible. In terms of sort of the transition to digital wallets, how much has COVID accelerated the transition to it? Because I know that obviously we've had these around for a while, but a lot of people have said they were not keen to use them. How many years do you think that it's made a difference?
Yeah, it's really interesting, right? And that growth figure where we've seen 3 years worth of growth in 1 year, you have to put that significantly down to COVID. I mean, the product itself, or most of the products that you ever use them, are extremely seamless and so convenient and so secure that you feel as a user that you're extremely well protected, and it ticks the boxes for you. I think the COVID piece, without a shadow of a doubt, linked to, and I can only use examples here in Singapore, but I know when I was in Australia as well, I saw these things before I came back almost a year ago. Shops now actually just say, no cash. Either they only ask for contactless cards or digital wallets, and that's increasing here in Singapore, certainly. I don't know if it's the same in Australia, because I haven't been, obviously, for the last year, unfortunately. But I think there's a real aversion to cash, and again, I just think there was the context that was given, or the story that was given at the time around cash being a potential unhygienic, tool for payment or method of payment has driven the global wallets even further.
Great. Any more questions?
Yeah, I might jump in, guys, if you can hear me.
Yeah.
G'day. It's Joseph Brooks here from Which 50. Phil, I'm just keen to jump back to the buy now, pay later. It's obviously pretty topical here. I'm just wondering, the debate at the moment, we hear from consumer groups saying it's a sort of harmful payment method, or it creates risks for consumers. Is there anything in your data that supports that suggests buy now, pay later is a sort of riskier form of payment for consumers? And the second part of the question, the other part of the debate is it's essentially credit, according to some of these welfare groups. So is, in your view, as a payments expert, is buy now, pay later fundamentally any different from credit?
I think, thanks, Joseph. I think, look, from our perspective, and just to give where we sit in. I mean, our responsibility to our merchants is to provide payment methods of choice that consumers are using in the market today, and to offer that up to give ultimately their consumers the choice. I think in terms of the risk side of it, the regulations that you're referring to, obviously there, and again, I think these regulations will spread globally. For us, we see regulations only as a positive thing. We're a regulated business ourselves. We work in regulated industries. For us, what that does obviously is opens up transparency and brings protection to consumers and brings protection to all within the ecosystem. So I think, the regulations, taking hold and sort of starting to come through is only a good thing for all people in terms of protection. We don't have any data that suggests risk versus no risk. That's not the sort of data that we look at. We look at just from a usage perspective, and we're obviously just seeing that usage growing significantly across different places. I think if you look deeper into this data and you start to see the shift from different forms of payment to other forms of payment, I think you're moving from potentially one form of payment to this form of payment. We can't tell whether this is added an incremental sales, like people talk about to the buy now, pay later will talk to the merchants about incremental. We don't necessarily see that piece ourselves. We just see the shift in the behaviors. And as I say, when we looked at the generational spend, whilst we saw a huge generational shift from the younger age groups, we're certainly seeing older age groups now starting to take part in this phenomena. And I just think that they're here to stay, they're here to grow, and I think the regulation side of it will only help everybody.
Okay, thank you. And in terms of how it's regulated, do you see it as being any different to credit?
At this moment in time, I think it's still early stage, and I think from our perspective, we'll just watch what each local government does in terms of how they manage this piece at the moment. As I say, it's not an area, Joseph, that we necessarily get involved with in terms of that regulation piece.
All right, thank you.
Thank you.
Any more questions? Feel free to jump in.
Oh, yes, I have a question, Phil. Just in terms of your commentary on the impact of the rise of e-commerce on retailers, what about for banks? Has that really impacted their business? I mean, we've already seen tie-ups with some of the Australian banks, buy now, pay later, and reinventing their card business. But I'd love to get your perspective on how you see that trend shaping across the region.
Yeah, I think that's a really interesting question, and I think the one piece that you alluded to there is around innovation. I think the banks certainly would like to partake in this. I think they're working with a number of different fintechs, depending on which country you're in. There's different parts, whether it's through an open banking solution, whether it's through working on some of the buy now, pay later solutions, whether it's also refining their partnerships and how they work in the credit space, for example, and they may then work with some e-commerce platforms. So I think they recognize that there is this huge shift. They have a vested interest. I mean, they obviously do a lot of the acquiring themselves. They do a lot of the credit card payments themselves into the e-commerce ecosystem. So I think what they're realizing is they have to innovate. To your point, they have to really sort of find new ways to engage their consumers and engage the merchants. They are an integral part of the system still today, but I think they obviously need to innovate and shift some of their products and some of their offerings to ensure that they're extremely valid in this new world of e-commerce.
Thank you.
If I could jump in with a question, can you hear me okay?
Certainly can.
Yeah, it's Jack Doan from Business Insider. Good to speak to you again, Phil, and good to see
Jack.
you in sunny Singapore.
One day you can be here as well, please.
Hopefully. Sorry to take you back to buy now, pay later, but it is topical. I just wanted to sort of get your view on, obviously the sector's grown very quickly in a very short amount of time. I wondered what your view was on, how much of the sort of transaction market buy now, pay later could potentially end up taking, and whether you see it as that sort of the buy now, pay later, as it matures in Australia, whether you see that growth trajectory slowing down at all.
Yeah, really interesting one, Jack. And I'm looking at my data as you were saying that, and I just for some reason haven't got the exact figure. We will send you afterwards that we do have a prediction of where we see buy now, pay later. We do see the growth continuing. There is no doubt. It's already actually. Sorry, I've just found my stat here. Do bear with me. So we actually see the growth for Australia more than doubling from 9.5% today to about 20% of e-com. So we do see the trend continuing. That's built off, I guess, the number of players coming into the market, the fact that it's already so embedded in the market, and also the growth that we're expecting to see within the market as well. I just think it's going to continue, and I think what you're seeing down there is a number of different players coming in and potentially tackling it in different ways that will appeal to different segments of the market and also different age groups as well. So our prediction absolutely is that it will continue to grow, and Australia does continue to lead the way, really, apart from certain parts of Europe. Sweden's an obvious one, given where Klarna is from, but it's probably leading the way in terms of growth at this moment in time. But what we're also seeing, and Afterpay is a great example, Zip with their partnership with Quad, Affirm in the US, Klarna, all of these guys in the US have also taken a hold in the US. So I think the growth will just continue globally around this piece as well, because to the consumer, there are the advantages that they are enjoying, and I think that those advantages are not going to go away. They're just going to continue to see a growth.
Appreciate that. Just to clarify, you said you forecast that doubling to 20%. Did you have a timeline for that? What was the time frame?
Sorry, by 2024. Yes.
2024. Okay, great. Yep. Thank you.
No problem.
Thank you so much for all of you for taking the time today.
Absolutely.
Thank you.
Thank you.
Thank you.
Thanks so much, everyone.